Welcome to the three-part series on this Inventory Accounting Simplified series. We are really excited about this series, guys. The best thing about a series is you can get way past just the basics and really go deep on a lot of stuff. So make sure you mark this on your calendar, save the dates for this. Today, February 19th is the first part of this. March 5th will be the second part, and March 19th will be the third part. So make sure you dial in, whatever we would say that. Make sure you come in. There's a word, it's eluding me right now, but make sure you save the date and participate in all three of these. It's going to be really worth your time. So let me go ahead and introduce our speakers for today. There's going to be four of us that you'll hear from. We will have me. I'm the CEO of LedgerGurus. Carly, she leads our inventory practice. Madison, who is the partner program manager over Finale, and Tamara, who's the director of sales and strategic accounts here at Finale Inventory. Actually, will you guys go up one slide? I think I go backwards one slide. I think I neglected to really introduce this particular session. So this particular session will be on the financial impact of inventory. As you guys know, if you don't already know this, it's super important concept for you guys to understand that inventory is primarily an operational problem with financial impact. So today we're really going to go deep on setting the framework to help you guys get successful by really going into seeing how inventory shapes your business's bottom line and really understanding how all the parts and pieces of that come together. So let's jump to the agenda so you guys know what to expect. So, first of all, let me just introduce LedgerGurus really quick. Looks like we're doing a poll first. So let's start here with this poll. Just tell us a little bit about who you are so we kind of understand the audience that we're talking to today, and we can make sure that we are like specifically aware of what your specific needs are likely to be. So if you guys will go ahead and just take a moment to answer this poll question. One of the things I think is interesting about these particular poll questions is it makes it pretty obvious that within the e-commerce inventory space, you're really going to fall on one of two sides of this. You're either going to be a business who's experiencing these problems, or you're going to be an accountant who's supporting clients experiencing these problems. But at the end of the day, we all feel the same pain and we all have the same issues. We're just coming at it from different perspectives. All right, so just a little bit about, here's the poll results. That's fun. So most of you guys work in an e-commerce business in a role other than, and I don't know what the other than is on that. I'm guessing other than accounting. Then you either own a consumer products business, and it looks like those are the two most common. So awesome. Okay, so a little bit about LedgerGurus. We are experts in e-commerce accounting. We have many years of experience with tracking inventory, COGS tracking. So when I say this, I mean we are battle wounded. We have either cried on behalf of our clients, cried because of our clients. Like this is definitely a space that we've lived in for a very long time. We also go very deep on sales tax compliance. We're primarily an accounting firm that focuses on e-commerce businesses, which means everything that touches e-commerce businesses, LedgerGurus goes very deep on. We're very big on profit-driven financial strategies, helping create visibility into maximizing your marketing ROI. And we're really trying to help clients like build for e-commerce success as businesses. I'm going to turn it over to Tamara to talk about Finale.
Thanks so much, Brittany. And Finale Inventory heard those cries, right? So we're both an operational and financial tool, and we're designed to eliminate inventory chaos. Since 2009, we've actually helped thousands of businesses take control of their stock, streamline operations, and really scale without limits across multiple selling platforms like Amazon, FBA, Shopify, Walmart, Etsy, just so many of them, too many to actually name here. We actually give businesses the power to grow without inventory and operations slowing them down, with tons of automation and tools that really are powered by real-time visibility.
Thank you, Tamara. So as we go into the agenda, there's something I need you guys to just understand, and that is that this particular group of people who put together this webinar today were very intent on actually adding value to the audience. So this is not going to be a salesy webinar. We're really going to be identifying problems and talking about solutions and really helping you guys in this particular webinar, because you remember it's the first of a 3-series part, to really begin to formulate the picture of all the pieces that come together. One of the things Tamara talked about as we were coming into this is the disconnect that they see being on the tool side of people who are taking each of these processes that we're going to be talking about, purchasing, tracking, selling, in isolation, and instead of being able to see the whole complete cohesive picture, the problems that are caused by this disconnect, and really reiterating the point that good operations leads to good accounting. So with that in mind, we're going to be talking about we're going to be introducing inventory operations and how it flows into accounting, really going into problems and solutions of purchasing, tracking, and selling processes, and then really talking about like the big question, which is am I ready? Is this the right time? And when is the right time to consider an IMS, which stands for Inventory Management Solutions? And with that, we'll kick it off to the actual content.
Thanks, Brittany. I'm so excited to be here, especially with Finale, our great partner. We're both very passionate about helping our clients with those inventory frustrations. We'd say 99% of the clients that come to us, one of their biggest pain points is inventory. They say things like, I just don't know how to manage my quantities. I don't know when to reorder. I don't know what my product costs are, or even how to calculate that. What are COGS? I don't know what COGS are. How does inventory and COGS flow through my financials? I don't even know what I'm doing with it. Just major frustrations. And so we try to help them at the beginning. When you're thinking of inventory accounting, we help them recognize what their biggest asset is, inventory, and how we're going to track that in the financials using COGS. But a lot of their pain points are operational things like managing quantities. That's something that they would need to do. What's my inflow of inventory? What's my outflows? Managing that. When do I need to reorder? And it can get so frustrating if they're trying to use several spreadsheets. They have one person doing purchasing, one doing sales. They're not communicating well. When they start off a small business, they have one product, one sales channel. It's pretty easy. And as it starts to scale, it gets more frustrating. And so our hope is to help them identify those operational processes that they can really become more efficient and help them. And then that will translate into better inventory accounting.
Thanks so much for that, Carla. I think that was literally the perfect setup for really understanding or walking into this series as well. I think that, in order for us to really, before we even dig into the chaos, we want to, start with really understanding what an inventory cycle is, because, there are a lot of misperceptions that we have about this entire process. And if you'll just bear with me for a moment, I really like to relate, the various different areas that we're talking about today, really with stories based on some things that I've actually experienced with speaking to so many customers, current customers, but also, former business owners. So let's just say that, you scored or you just purchased a shipment of PlayStations, right, for your online store. Huge win. But here's where things can really get tricky. If you don't track your inventory properly, you can actually oversell. And we all know that that leaves customers angry. Or you could just essentially say, you know what, we're sitting on extra stock, we're not really selling it. And as Carly mentioned a moment ago, that's an asset. And so now that means that we're draining our cash. Orders could be flying in, but but one of the questions that you always have to ask yourself is, are we making money? And if you don't know your costs, you might be selling at a loss. Inventory, simply put, is a cycle. If you're tracking it right, your business is going to thrive. And if you track it wrong, your cash flow is actually going to suffer. So I think that, the most important thing for us to really understand here is, let's talk about making money, right? I mean, that's ultimately what I think that poll showed, that there were, about, 30% or 40% were actually business owners. Inventory isn't just about having products to sell. It's actually about making sure you're turning a profit. And Sam, if we can go to the next screen, we'll be able to take a look at that. So what's the solution? It's actually proper inventory accounting. When you need to be able to track every dollar, right? That means what you're buying, what you're selling, and also what's left, so that you can make some well-informed decisions. And this cycle isn't just about keeping stock organized. It's about making sure that your business stays profitable. With the right systems in place, you can adjust your purchases and sales based on real data. And this keeps cash flowing, and ultimately your business is then growing. And this is why inventory isn't just an operations problem, it's a financial one. You want to be able to track it so that your business doesn't just survive, you're giving it the best opportunity to scale and grow. we can move.
Well, thank you, Tamara, for that. That goes straight into purchasing, kind of that first step in the inventory process. And, let's be honest, how many of us on this call are still using spreadsheets or some kind of manual system to track our purchasing? No shame in it. We see this all the time. So, at first, it might seem like a simple, cost-effective solution. You plug in some numbers, track your stock. It feels like you've got things under control, but then things, start slipping. So maybe one day you realize you're out of stock of a bestseller because no one noticed stock was running low. Or maybe the opposite happens and you accidentally order way too much and now you've got shelves packed with inventory that's just sitting there and tying up your cash flow. And these are just the beginning. When purchasing isn't streamlined, your business is unsure of what to restock. Without a clear system, you easily miss your key inventory needs. These lead times can catch you off guard. You think something's going to arrive in 2 weeks, but it ends up taking 2 months. Overstocking and stockouts happen. So either way, you're costing your business either tying up funds or, wasting funds on things that could have been spent on inventory that actually sells. And, orders getting lost in the chaos, product costs unclear. So not being sure of how much, you're paying for your product costs, including that true product cost, which is, the fees and the duties and the things that go into actually purchasing the product. Not knowing these things, really helps, really inhibits your ability to track profitability and kind of make good decisions. So as you can see, relying on manual processes alone kind of creates more problems and solutions. But good news, there is a better way to handle this. Thank you, Sam. So from chaos to control. So we just talked about, what chaos happens when you rely on spreadsheets and manual tracking. Stressful, time consuming, and honestly, just not really sustainable as your business grows. So what do we do as a solution? We use, instead of reacting to problems as they happen, we can take control with a centralized tool like Finale that helps keep everything in sync real time across your channels. No more scrambling to find purchase orders, no more checking that gigantic spreadsheet trying to see how much you need, how many you ordered last month. You'll have all that data in one place working for you. So what a proactive purchasing system actually does is keep all your purchase orders in one spot. No more digging through files, digging through your PDFs, trying to figure out what you ordered, when, what date, how many. None of that anymore. Managing purchases all in one, all your purchases. So if you're buying, goods from 10 suppliers, one supplier, if you're buying goods from finished goods or raw materials, all of those orders can be maintained in one streamlined system, keeping everything cohesive. And this also gives you accurate cost calculations. So you're not surprised by hidden fees or unexpected expenses. And this costing is including every cost, like I was saying before. So shipping costs, landed costs, everything gets factored in. So you know your true inventory costs. And additionally, helping with shrinkage. So you've got lost or damaged goods. Things get shipped to you from your supplier, they arrive damaged. Now you can actually monitor them and account for them and, write them off. I'm no accountant, but write them off, when you need to. And then again, syncing everything in real time. So no more outdated spreadsheets. Your data is updated instantly. And basically this kind of tool takes the guesswork out of purchasing. You're not just reacting anymore. You're making smart data-driven decisions to help your business grow, improve cash flow, and keep those customers happy, which is always the goal.
And as Madison stated, a lot of people are still trying to track inventory manually in spreadsheets. And a lot of times it's several spreadsheets or several systems or several softwares. But if we can use a centralized one, it can help as we think of inventory inflows and inventory outflows and needing to track all of those. So the inventory coming in from purchasing, from inventory going out, from your sales and damaged goods and things like that. When we're not centralized, we're using lots of different systems, you're missing inventory, right? Maybe you're not tracking the damaged goods or things going out for marketing, so you're missing it. You have inaccurate counts. You're going in to do counts, you're putting in the stock take, but it's not feeding to other systems for a long time, so you're missing things. Lost returns come in, but you're not looking at them and deciding what goes back into inventory. It goes back into the inventory system. It's just kind of lost, or maybe you're not even tracking them at all, or someone else is tracking them, it doesn't give it to you. Untracked stock, again, stock out there that you're not tracking. Maybe someone goes into the warehouse and pulls a bunch of things for a big marketing event. It doesn't let you know, so we don't put it in the system, and so that's untracked. No clear warehouse processes. There's the warehouse. There's no process of where is it organized? Where is it at? How can we pick pack it efficiently? How, when the purchases come in, get it put away? How much time is it taking us to put it away and pick and pack? Manual overload, and that talks again about trying to use all these different spreadsheets, the time consuming inventory count, right? Your account says at the end of the year, I need you to do a physical count, and you've got stuff all over in a million different places, and it takes days, you got to shut down. So the manual overload can be very chaotic for people. Disorganized storage. If you've got inventory in lots of different locations, you're trying to figure out what's where, that can be very, very chaotic. You guys, I love our little guy that's just wanting to cry. Duplicate SKUs. Think of this. This is very chaotic for people if they're purchasing under one SKU, but then they have a different SKU for each sales channel, and they're trying to track it, and they're trying to do counts, and they've got different SKUs for different inventory. It can be very chaotic. You've got those blind spots, meaning, we're really only tracking stuff weekly because we don't have enough people. So you've got a week where you're not really tracking it. But if you can do it real time, it can really help with those blind spots and those higher holding costs. You've got all this inventory. You ordered it. You thought you needed it. It didn't sell. Now you're paying these warehouse costs that you didn't need the inventory, or you don't realize you're not selling it. So you don't know when to write it off. So it sits there. So you're paying all these costs that you don't need to of the tracking. Very, very chaotic. So little pop quiz or poll for you. Let us know which maybe one you are struggling with the most. And so streamlining this, if we can move from those manual processes and help people get into one centralized system, a real-time system, it can provide accuracy and efficiency. So your inventory value. At any time, you can look at the quantity on hand. Your system is calculating a good cost, so that quantity times your cost is giving you a good inventory value, and you know what the value of your biggest asset is. You're tracking all those inflows and outflows that we talked about. All the purchases are coming in, as Madison said, that nice purchasing process and knowing, and all in one place. But you're also tracking all the outflows. A lot of our clients are really good about tracking sales, things that are going out that they're getting revenue for, but they forget about all those other reasons that inventory leaves the warehouse, and this helps you track it. Refining those product cost calculations. It can be hard manually trying to determine your product cost, and then just even thinking, well, what is in my product cost? Am I just using the cost from my vendor that I bought it for? Or do I want to land a bunch of things like shipping and taxes, and systems like an IMS can calculate all that for you on a real-time basis. So using a structured physical count method regularly, you'd be surprised how many of our clients don't do regular inventory counts. So at least annually, but if there can be cycle counting, or you're doing it quarterly and coming up with a good process of counting your inventory and then checking it against your 3PLs or your IMS. Setting reorder points. A nice thing about the system, you can have reorder points set based on sales velocity, which I love about a lot of our systems. But if you know your set reorder points, you can put them in the system, and it lets you know you need to reorder. So it takes a lot of the chaos out of tracking. And then, of course, the streamlining of pick, packing, and shipping. If we think about how much time it takes for employees to go through the warehouse and pick all the inventory and needs to get ready to pack, if we can take that cost down and the time down, it will help us financially and be more profitable. And one way to do that is using a barcoder, right? And whether you're doing some type of batch picking or wave picking, using a scanner can really organize the time for you to get through the warehouse and cut those costs. So the next slide is going to show you a little video of a barcoder that's super cool, and then we'll look at our chaos around selling. Look at her go.
Yeah, and this video is, efficiency in motion. She is doing the wave pick method. So instead of her running back and forth throughout the warehouse, grabbing one order at a time, she's able to load up this cart, load up her orders, and go through the warehouse efficiently with a directed picking method, going through picking multiple items for orders all at one time.
Love it.
So with the right IMS, wave picking can help streamline operations, making picking packing more efficient, and reducing errors and time, most importantly.
Yes.
Wonderful. Well, you heard Madison talk about the purchasing chaos and a solution to that. And, Carly even talked about the tracking chaos and a solution to that. But what about the selling chaos? Many times when I'm speaking to businesses, one of the first things that I ask them is talk to me about your pain points. Tell me about your challenges. And it's funny because most businesses, when they come to Finale, for instance, one of the things that they say is, hey, we thought our business was thriving. Orders were pouring in from Amazon, from Shopify, eBay, Etsy, and on the surface, everything looked great. But behind the scenes, there was a totally different story operationally. They were learning that they were waking up to frantic emails, orders were being canceled because they sold items that weren't actually in stock. And the immediate reaction, 9 times out of 10, is in order to prevent that, why don't we just stock up? Why don't we fill the warehouse with products so that we can make sure we're able to fulfill those orders? But then what they were learning on the back end is we're tying up cash. And then on top of that, things were getting more complicated because, if you are a seller who is selling, a single product, but not just selling a single product, excuse me, but you're selling multiple, kits and bundles, then that means that we're needing to pull multiple SKUs from that single cell, and manually tracking it is not always efficient. It just doesn't track it properly. And then meanwhile, we get into that issue surrounding calculating costs, which just really becomes a guessing game in many of those conversations. We're realizing that there's not really a clear picture of what the business is actually making, which means there's no idea of what the profitability is. In short, this is really just selling chaos. It's not just about losing sales, it's really about losing control, because instead of running the business, you're constantly reacting. You're scrambling to fix inventory problems, and they're never, seemingly ending, right? And what we try to think about is, well, how can we optimize that? What do we look at? What is the solution to fixing all of those issues? And it's really about taking that control back. You want to be able to see every sale in real time across every selling channel, and you want to see it in one place. You don't want to have to bounce back and forth from one solution to the next or one spreadsheet to the next. If you're not guessing, you're not overselling. You know exactly what's in stock. And instead of manually tracking your costs, every expense is automatically recorded. Again, we talked about that before with the purchasing. And you'll see this poll that just popped up because we want to know what's the biggest selling headache that you actually have. So if you'll take a moment to answer that, that would be great. But because we already have our expenses in the one solution, and we're automatically recording that, when we see that sell, we're now able to also calculate your cost of goods sold. And so now we're able to see your margins more clearly, and you can see exactly what you're making on every sell. And even as it relates to those kits and bundles themselves, that's no longer an issue because inventory is being deducted correctly across multiple SKUs. So that prevents, again, that overselling, and it also eliminates that manual tracking. So when stock levels are always accurate in your warehouses, you aren't stuck reacting to inventory issues. That then gives us the ability to accurately forecast your inventory demand. So what do we need based on the actual selling activity itself? And an automated solution allows you to establish those reorder points based on that sales activity so that you can prevent those stockouts before they happen, but we're not tying up our liquidity with stock that we don't even need, right? So it's just a much more well-informed decision. But there's an even bigger change that I always like to hone in on. Businesses can stop playing catch up and start making smarter decisions. Instead of you fixing mistakes, you can finally focus on growing your business. And again, I just kind of take this back to, at the end of the day, inventory is not just about what you're selling, it's about making sure, you're profitable, you're making money, and it makes sense to continue to procure that stock in a nutshell.
I love how Tamara's talked about if you can spend more time or less time dealing with all these issues and tracking them, figuring out what's wrong, letting it automate through a system and spend more time trying to figure out what your business needs is so great. So if we talk about how operation shapes inventory accounting, or we think about using a centralized automated system and how that can flow into our financials, if we're using a centralized system for purchasing, which then creates those bills that sink into our financials as accounts payable. And then we're tracking our quantities on hand. Our system's tracking those inflows and outflows. It is calculating that costing so we can get a real good value, and that too is flowing into our financials. If we have good operational processes around sales, then we have our revenue and our cost of inventory that's shipped. Something's tracking everything that's shipping and has those good costs and calculates that COGS, then that will flow into our financials as well. And I was actually going to see if Brittany had something to add on that. Anything, Brittany? I'm kind of putting her on the spot, but she is our CEO guru.
Oh, you're on mute.
I just realized I was muted. Yes. So as an accountant, we think a lot about the mapping of these activities. And as we've gotten really deep on inventory, we've learned more and more and more about the way that activity X translates into financial value Y. And it's something that I think that anyone who's engaged in inventory needs to understand, that an inventory system, inventory tracking, anything around inventory is fundamentally an accounting process. And that almost every single thing that passes through from, like Carly said, from the point at which we order to the point at which we track, to the point at which it sells, to the point at which it's shipped, every single one of those has a financial implication to that process. And really understanding how that's true and where those crossover points are will help you be more successful if you are the brand owner, and will help you help your clients be more successful if you're the accountants that are supporting those brand owners.
That's great. Yeah, like all those operational activities do translate into a financial transaction. And a lot of times when clients are doing it manual, they don't think to tell the accountant, oh, by the way, we gave this inventory away for this, or, oh, by the way. But if it's flowing through the system and it's connected and the accountant knows what's happening, it's mapping, or it's pulling the information it needs, then we capture all that inventory activity that we need financially.
Yeah,
Even
by
those
the way.
samples.
Yeah, the by the way is our favorite. The by the way, I added a new sales channel. By the way, I'm now doing wholesale. By the way, I just launched a whole new series of products that I didn't even bother to mention. By the way, we're significantly changing the way we track our costs. That's our favorite. The by the way is like now a trauma trigger for me. Like the by the way. Right?
Yeah, but if they use a system, now we can say, hey, I noticed you added a
I
new
noticed.
channel.
There
like
you
there's
go.
no waiting for
I
the by the way.
noticed that. Exactly.
Yeah.
Right.
There's a process and it works.
Yeah.
It works. Exactly. Yeah.
So when is the right time to implement an IMS? I'm sure you guys remember the first days of starting your business. You were getting a couple orders here and there, managing a few SKUs. Maybe it wasn't so hard to keep track of. And then we fast forward, to present day. You've got orders coming in every direction, stock going all ways, and the time starts to come where you start to looking for a system to connect all these moving parts. So how do you know when it's time to upgrade to an inventory management system? I mean, to be honest, if you're asking yourself that question, you're probably already feeling those pains. So it might be a good time. But, maybe your orders are piling in faster than you can process them. You're constantly playing catch up, or maybe your stock levels are all over the place. Sometimes you have way too much or way too little. You're sold out, scrambling to restock. Your operations might be feeling efficient, like you're doing a ton of manual work, just trying to keep things moving and scaling. I mean, it's kind of hard to even think about scaling when you're too busy, spending all your time fixing inventory issues instead of focusing on expansion. So, and then there's the customer side. If they're frustrated, they're getting delayed orders, seeing out of stock messages too often, it's a red flag to them. And let's not even start to try to manage multiple sales channels without a kind of centralized tool. It's definitely a nightmare. So if any of these kinds of issues sound familiar to you, it's probably time to invest in an IMS that brings everything together. So like Tamara and Carly were saying, so you could stop reacting to problems and start running your business proactively.
And Madison, can I
Mhm.
just throw something else in there? Because one of the things
Please.
that I'm also that I think we're beginning to see more and more is, as sellers are beginning to sell on more platforms, there are more rules, and the rules are different from
Right.
one selling channel to the next, right? And so,
Yes.
if you're competing for that buy box, or if there's a certain amount of stock and you are below that threshold. There are also penalties that can be assessed financially if you're not keeping enough stock on hand. And so, another good reason to actually look at implementing a solution is, hey, we want to make sure that we're still competing. I want that buy box, or I want to make sure that, Amazon
Mhm.
FBA, for instance, has the adequate amount of stock and I'm not being dinged because I don't even know when I need to send them another shipment. Every reason and example that Madison gave is great, but just as you're thinking about expanding, or even if you're on some of those current platforms today, it just gives you the ability to be empowered to do even more, right? Because you have that informed confidence surrounding, when should I purchase more stock? When should I procure it? When should I, bring it in? And when should I even, what's the quantity that I need at those, those designated selling channels themselves?
Can I add one thing to this slide also? Because this is very focused on the operational side. So from an accounting side, when do you know is the right time to implement an IMS? Like, what are the triggers? These are the questions we hear our clients say all the time who come to us during the sales process, where we know the immediate thing we do is make an introduction to one of our partners like Finale. The things they say is, I have no idea what the value of my inventory is. I have no idea what the cost of goods sold is. I have no idea whether I'm profitable or not. I'm operating completely blind financially. So those are the things they're saying to us from a financials perspective. So if any of those things are true for you, whether you're dealing with the operational side of things where there's true chaos, or whether you have complete lack of visibility into the financial side because you just don't have a handle on what's happening financially, like those are usually pretty good triggers to start to consider this as a significant advantage to leveling up as an organization. We call it like the maturity spectrum, like it's not necessarily the move for a little business who's trying to figure out how to optimize their marketing to really put in the time and effort into mastering an IMS. But as an organization grows, there are operational and financial problems that become major, major gaps where this becomes the bottleneck to growth and progress. And when you hit that point, let me just say right now, like moving to NetSuite is not the move. Like they will tell you you should move to NetSuite, but in reality, what you really need is an IMS. That's the point at which you know it's time to mature in that way, is when all of these things begin to be true for you.
Thank you, Brittany and Tamara, for adding additional color. That's awesome. But onto the benefits of integrating Finale in QuickBooks. So I'm going to, be biased. I would say my favorite benefit of Finale in QuickBooks is the time saving aspect. So with Finale integrated with your QuickBooks account, Finale is syncing this data from Finale to QuickBooks and bidirectionally every 5 minutes. So you're creating a purchase order in Finale, it's syncing to QuickBooks within 5 minutes. And that, saves time for your accountant, your bookkeeper, like, for example, like Carly. You don't need to tell her you created a purchase order for this supplier. She can go into your QuickBooks account and see that purchase order and see if you created a bill and see if you paid that bill. So all of that is easily integratable and seamless once you connect your IMS with QuickBooks or accounting solution.
And
And
I know, Madison, there's accountants out there right now that see this and read it and are having an anxiety attack. Like they've connected
Yeah.
tools and it's made a mess, or
Mhm.
they don't understand what's happening, and it doesn't go as smooth as they thought. Part of
Right.
that's not understanding what the tool's going to do, right? Or it's mapped
Mhm.
incorrectly. So human error in the mapping and whatnot. But and one thing I love about Finale, I do have to say, is you can choose what syncs over or not. We have a lot of people that are like, I really don't want to connect it. I've done that before with a tool and I don't want to go there again. But that's okay. Don't feel like you have to connect it. Even though it's one of my favorite things of Finale is you can connect it. Finale is still a huge benefit, even if you don't connect it to your to QBO, right? Or your accounting platform, because you can go in and pull the data you need for your financials, and it's accurate and true, and you're not wondering. So even if you're not going to connect it, the benefit of just using it is still huge. And then the benefit for a lot of these tools is deciding how I want to connect it and only connecting certain pieces. A lot of people will only use an IMS for purchasing or just for different sales. So being able to connect it and understanding how it connects is important, and realizing even if you don't connect it, it's still a huge benefit to use a centralized IMS and keep your operations nice and clean.
Yeah, and if I can add one other part to that too, I just love the way that you phrase that, Carly, because one of the things that I tell many current customers, but even businesses that we're currently talking to right now, is that there's so many moving parts, right? Countless moving parts that they really require careful orchestration, and that's one of the reasons why we work so closely with LedgerGurus, and we partner with them, because you really want to have that right expertise by your side. It makes all the difference. Like Carly said, really just knowing what to turn on versus what to, turn off, what to connect to or what to disconnect. There's so many different moving parts. And while, it can definitely, be a seamless process that really, gets you to a point of where you're not, pulling your hair out, just know that you don't have to go it alone. And when you are ramping up, you have that operational side, but you also have your financial side. And so just partnering with an inventory accounting expert makes all the difference.
Right. And this has been one of the best parts about our partnership with Finale, is that when we partnered with other IMS solutions who didn't necessarily implement their own solutions, we were caught between the world of partners who didn't know the tool as deeply as the tool would have known the tool. And then the crossover into the accounting was something they weren't necessarily considering during the implementation. So the partnership between Finale and LedgerGurus, we feel really good about the level of success our clients have been able to have during the implementation process, and then also over into the crossover into accounting. And I want to bring up one question that came up in the Q&A because it has to do with the integration right now. And that is, the question was, does the integration Finale plus QBO, is it complete in and of itself, or does it also need to have A to X added to sync an Amazon payout into QBO?
Great question. It can be, well, it can be a little bit of both. And so I'm going to answer part of that question, and then I'm going to, punt it over to Brittany and Carly to answer. I think in really piggybacking on what Carly said a moment ago, Finale has that ability to essentially connect the way that you want it, right? And so with that having been said, you can choose what GL accounts you're going to be syncing into QuickBooks. And so if you decide that you don't want to sync certain GL accounts into QuickBooks, then yes, you can use, A2X. And again, there are, preferences and best practices that I'm sure Brittany and the team will get into. However, it is a full-on solution. If you want to essentially, flow, all of your, AP and your AR through to QuickBooks from Finale, you can do that. But again, I think that our experts have some best practices as to what the preferred method is.
And Brittany, I'll start, and then I'm going to punt it to you. We do recommend first on the sales side, for any type of wholesales that you're entering and that do have an AR component, that we do connect that to sync over into QuickBooks. But all of your sales that are e-commerce related sales coming from your sales channels or platforms, we would not sync that over, and we would use something like A2X to do that. And why? Go, Brittany.
Yeah, so I want to specifically talk about the pain point that A to X solves for, so you know when to introduce something like this into your workflow. So while Finale will grab the cells and can sync it over, what A to X does is it fully reconciles the data that's coming over from sales channels with what you're actually seeing deposited into your bank account. And those of you who have tried to do this process manually know that this can be really tricky. So if you allow A to X to be the syncing side of the cells instead of something like Finale, then you also have the added advantage of that reconciliation process happening as well. So as you guys know, like if Finale is syncing over the cells and AdaX is integrated with your system and pushing over cells as well for that reconciliation, you're going to end up with double cells. So one of the things we really like about Finale is the fact that it lets us control what syncs over and what doesn't. A lot of other tools are an all or nothing sync, which means you either have to fully embrace the world where you have the cells come over from the IMS and then you have to deal with the issues around the reconciliation, or you have to like abandon having the data come over from the IMS completely and move entirely to tools like AdaX to bring over the cells data. One of the things we love about the way that Finale has built their integration is that it allows you to control this and say, you know what, I think I'll take cells from AdaX because of the reconciliation, but I'd still like COGS to come over from Finale instead. And so like it really does allow for a workflow that can be very customized depending on your business needs, which is quite ideal, honestly. Yeah. Okay, so the next question we have that I thought was a great question is, what is the average size of business revenue you see that come into an IMS?
Oh, that actually really varies. Currently today, I would say that sweet spot is between 2 to 50 million a year.
Yeah, great.
I mean, just
Yep.
go ahead, Brittany.
And we tell our clients, like because another thing I love about Finale, you guys will hear me say this all the time, another thing we love about Finale is that they have packages that are really ideal for small sellers that are at a price point that is very, very affordable. If you want to begin to tackle the maturity of this when things are still fairly small and simple and you can wrap your head around it, it's a very affordable tool based on like number of integrations and stuff like that. But as you grow and turn into a really large, complex business, it can grow with you as well. So we have clients who are like 60 to 80 million dollars a year in revenue who are not in an IMS, and they should be. And the reason why they're not now is because they waited so long and their businesses grew so complex that the idea of the workload involved in that is now so overwhelming that they literally don't take action. So I would say, do not wait until you are a large, complex business to tackle this, because then you will probably miss the mark on it. And then it will become even more painful than it otherwise, but you have nothing to lose by tackling this journey early on, because it is so much easier to wrap your head around it when it is small, and then it is so much easier to grow and expand little by little instead of trying to jump into something that's now very complex. Yeah. Does anyone else want to add anything to that before I go on to our next question?
No,
Okay.
I go ahead.
Okay. The next question was basically around calculating COGS for clients that don't have IMS. So basically the question was, if you're not using an IMS, how are you getting accurate inventory specifically for Amazon FBA sellers? Going into some of the complexities around lost and found inventory, deferred transactions, since it's not taken into account. Through with AdaX, how do you reconcile all of this stuff? So really the question is, what do the processes look like if you're not in an IMS solution? And I would say this is probably an accounting question primarily. So Carly, if you want to just like give them sort of a overarching idea of what we do for our clients who are not an IMS solution, so they kind of understand what that looks like.
On the accounting side, what we start with is trying to understand your purchases, right? Who are you purchasing inventory from? So we know on the balance sheet what needs to hit inventory and increase that value, because that's the only insight we have, right? We don't, as accountants, have insight into your operations. And if you're not in a tool, we have a little insight we can get in your tool. But if we don't, we just have to rely on you saying, well, these are my inventory vendors, these are my purchases. And as those come through, whether it comes through the bank feed or comes through as bills, we code them to the right spot. So we're increasing with our inflows on our balance sheet. Then every month we talk with our clients to decide, how are we going to decide to calculate COGS, and then on a monthly basis expense it over to the P&L. Now this can vary from client to client. As we talk to them, as Brittany said, some come and say, well, I don't really know my product costs, and I don't want to go in a tool, and if we have a client that tells us that, like, I don't know my product costs, I don't want to take the time to calculate them, and I don't want to go in a tool, then let's talk about a client that does have their product costs and can tell us their product cost. We would suggest calculating a sales-based COGS. We would pull all the sales during the month, So we can see what went out, that inventory outflow for sales, and multiply it by the product costs and the quantities to determine your monthly COGS. And then we book it each month. But some of our clients, again, don't have a product cost and they're like, we don't know. So we try to offer other methods and say, well, we could use a percent of revenue. If you know about how much, we can use some type of estimates. We can use, if you're doing regular end counts and you know your ending inventory value, we can back into it using the cost of goods sold equation. So we have different methods to determine COGS, but we need to book COGS every month. And so we would use that. We're booking COGS so that our outflows are accounted for. But remember, that's only one inventory outflow that we can account for. So if we have clients that operationally aren't tracking other outflows like damaged goods or things going out for influencers, like we're not capturing that. And so on a monthly basis, we do our best to capture what we can as inventory leaves by sales, using whatever method that the client is comfortable with or able to supply that operational data for us. And then at the end of the year, or at least once a year, we do have to capture the rest of those outflows that they're not tracking operationally. And so we do an inventory true up, and we would ask our clients at the end of the year, we really need you to do a physical count and value your inventory and say, the value of the inventory I have of this right now is this much. We see what we have on the balance sheet, and then we need to true it up, and there's an adjustment. And that adjustment is usually all those outflows that weren't accounted for all year because there were no operational processes in place. So we have a lot of clients at the end of the year have these huge adjustments. This is another reason a lot of our clients are ready to go to a tool. They're tired of those huge adjustments. The tool will track those monthly and know what those stock takes are and watch those, so you're not surprised with this huge adjustment or the frustration of valuing your inventory at the end of the year because you don't know your product costs and you're not really sure where things are at and what's been paid for and not received, or received and not paid for, because this person's doing purchases and this worksheet only gets updated once a month. So as an inventory accountant, and we're trying to help our clients and they don't have those operations in place, that's the best that we can do at that point. And then we try to meet with them and talk about it. Okay, let's talk about your purchasing process. How can we make this better so that we can get the data we need to give better inventory accounting for you? And we'll help build out manual processes as much as we can. Let's track your returns. Let us know at the end of the month what returns went back in inventory so we can do a journal entry to put that back into inventory and back out the COGS. So we can do a lot of that manually and talk to them. But again, as you grow and get bigger, even those manual processes for us as the accountants can become very difficult. So, and fully human error. So those tools are great. I don't know, did I answer it well enough, Brittany?
Yeah, that was great. And one of the things I want to add to that is, anytime you're not in a tool, but you're sort of asking your accountant to calculate COGS for you when you're not in a tool, you just need to know that an accountant cannot duplicate the power and capability of an IMS. And so there will be inherent limitations, like what Carly was saying, larger adjustments, because you're not capturing things. An IMS tool is designed to integrate and capture data in real time. And so it's watching everything coming in and it's watching everything selling, and it simplifies processes like, for example, and this leads me into our next question that came up in just a second, like the allocation of landed versus buy cost becomes really hard for an accountant to do in a spreadsheet, but is fundamentally built into the process of an IMS, which leads me to this question that I want to ask next, really directed towards Finale in this process, is what would be the best way to calculate the landed costs? Can Finale track the landed costs on a SKU level? Is it FIFO or average with every new PO?
Hey, go ahead and take that, Madison.
Yeah, so Finale does a weighted average landed cost tracking method. So on your purchase order, you're able to enter, the unit price you're buying it for, and then any other adjustments associated to that purchase order. So if you're paying any duties, any fees, any taxes, any miscellaneous fees, and anything that additionally adds to that product's cost, you're able to add it on the purchase order itself and then allocate that adjustment. So you can tell Finale how you want Finale to allocate that duty. Do you want it allocated by subtotal, by equal distribution, by quantity? So you can tell Finale specifically how you want us to allocate these adjustments, and then Finale is able to roll up and give you a landed cost per SKU. And that is on a per SKU basis, and it is updated automatically. So as you receive that item on a purchase order, this week it'll update, you receive it next week, it'll update on the back end as you receive that item on a purchase order for varying costs. So it is all automated.
Great. Thanks, Madison. As opposed to accountants trying to do that in spreadsheets, by the way, which is really hard, very time consuming. Time equals money and is fraught with human error. And you have to be like an absolute spreadsheet wizard, which Carly is, but even spreadsheets have their limitations. Like this is really where you start getting into the tools.
Well, and Brittany, to add to that one really fast, with the landed costs, a lot of times sellers, well, business owners will have a cost come in later for shipping. It's a third-party shipping bill and they want to land it 2 months later. The PO's already been put in, it's been received, but now they need to land this. And Finale allows you to land it later, redo the cost, and then it updates your COGS from like we can't do that manually, go back and then update COGS for all the sales for the 2 months that it's sold. But Finale does that. And so that's great too, the ability to do it after.
So I want to take the next question if you guys are okay with it, because it really speaks to the pain of a business owner trying to track profitability and understanding how to be profitable with the cash pain that they're experiencing. So the question is, and I'm sure every single person on this call who is a brand owner can relate to her question. Her question is, how do you create profit and grow when you're a new or small business with an inventory markup of 50%? My confusion comes from the fact that if I mark up 50%, which is the industry standard, you then eventually have to turn around and replace that product. And many brands have order minimums, but what you earn goes into replacing what you sold and your break even. And that is without accounting for shipping costs. If you order in higher bulk, it is more cost effective, but then overstock issues come up sometimes. And then she adds, I will then add to the above that marking it up higher than 50% or too high makes it difficult to compete with other companies who offered at a 50% standard market or even cheaper in some cases. So this problem that you're describing of basically having to front end the investment in inventory from a cash perspective, and then only getting 50% markup on the profit, and then having to turn around and figure out how to turn around and rebuy your inventory when you have to, again, lay out the cash on the front end. How in the world do you create profitability and sustainability as a business? So first of all, one thing you just need to know and understand is that you are not alone in this pain that you're experiencing. Like this ability to kind of grow and the cash process of, having to pay up that cash up front and then the profitability is actually tracked over time as it's sold, but that doesn't change the fact that the cash outlay usually has to be invested up front. I also own a brand business and I'm an accounting firm owner, so I feel like I can really speak to this from a place of wisdom, which is that in the early phases of this, it becomes particularly hard. And one thing you need to know is if you are in a fast growth trajectory, the cash is going to be even more painful than it would otherwise be. Because if you are on a slow cash trajectory, then as that cash cycle converts, and I want you guys to be aware of the fact that you have a slow cash cycle. So this is at the heart of your problem as well. And Madison touched on the cash cycle, but the length of the cash cycle is even longer these days than it used to be because oftentimes you're ordering from overseas. And so that cash cycle starts when you order the product and have to cough up the cash, at least for a down payment up front. And then you have to wait for that product to be manufactured. And then you have to wait for that manufactured product to travel across the ocean and get into your warehouses. And even then you might then be queuing it up to be sending it on to FBA. And then you have to wait for that product to sell from that warehouse and wait for that cash to actually deposit into your bank account before you fully complete that cash. And meanwhile, you probably had to place an additional order, which then requires additional cash on the front end of this. Basically, what I would say about this is you either need to scale back and control your growth, or you need to find sources of capital early on. So we have several videos on our YouTube channel that talk about sources of capital. There's a lot that we really like that we are very aware of. Some of our other favorite partners are Settle because they offer like this front end investment financing. QB QuickBooks Online is now integrating more deeply with Amazon in part to improve the capital offerings for their e-commerce sellers. Starts with an A, the credit card that starts with an A.
American Express.
Thank you. American Express has a line of credit that's specific for product businesses. Oftentimes it can be hard to get capital for product businesses because you don't have the collateral that a lot of bankers require. So I wouldn't necessarily recommend like the banking route on this. I would recommend some of these other sources like Settle, like the American Express line of credit, like the capital offerings being offered right now through QuickBooks Online. But because of the cash cycle, if you are trying to self-fund entirely from profits from the business, you will either have to scale your growth way back if you're planning on doing that, or you need to find sources of capital early on. We had to find sources of capital early on, and then as time goes on, like keep the money in the business as working capital. Don't just take it as business owners until you build up enough working capital that you're able to fund product purchases and fund growth on that. But the beginning phases of this are just painful. Like it's unfortunately kind of just the way it is. One other question is there a recommended report to extract, and how can it be customized to identify which items are running out of stock?
Yeah, I'll take that one. Actually, there is, and you can either customize the solution or there's already a built-in solution. So within Finale, we have reordering thresholds that are that we can establish, and those can be based on min-max numbers. So in other words, we establish a minimum threshold, and as soon as you reach that minimum, there is an alert and a notification that is then sent to the users within the system itself to essentially let them know these are the items that are, running out of stock. The reorder method that I prefer and that I highly recommend for many e-commerce sellers is actually the reorder method by sales velocity, because it's actually taken into account some of the things that Brittany, Carly, and Madison touched on. It's looking at your supplier data as well. What's the lead time? How long is it going to take for me to receive this purchase shipment once I send this PO to my supplier itself? When I receive that shipment, how long does it take the team to process that shipment itself and then make it visible so that it is, able to be sold? It's also taken into account your percentage of growth so that we're not flat with, forecasting those inventory needs. And if there are any minimums that you have to meet when placing orders with your suppliers, those are also that's also a data point that we're taking a look at. And then there are countless others. And when we're doing that, we're also looking at what is the actual selling activity itself. So what we're doing is actually gathering or getting an aggregate average of your sales velocity as well as your consumption velocity. And I know that maybe throwing some big words around, but essentially what we're saying is, hey, how often are you, selling this product? And if you have several warehouses, what is the consumption need at each individual warehouse itself? Because we don't want to just have a blanketed response with you need 100, units, when you may only need 50 at a specific warehouse itself. So when we're gathering all that information, we have an internal algorithm that allows us to forecast what those needs are so that you're not selling out of stock. And those are reorder reports that we can customize based on what you're looking for. And those can be automatically sent to you directly via email, or when you're logged into the user interface, they're actually under the purchasing module itself.
Thanks, Tamara. Okay, so we want to kind of talk to you guys about the next webinar and what to expect, but there was one last question that I think is a really good one. So and this one I think is a great one for Finale to answer, but just keep it quick so we can get to. And their question was, if you're ready to make changes to your operations and accounting, implement a new IMS, how long does it take to implement, and what are the general costs with Finale?
Great question. And since for the sake of brevity, Sam, if you'll drop a link to our pricing page, that'll be great. I'll speak real quick. Timeline really depends on the complexities, your business complexity and readiness. Typically, a basic IMS implementation takes about 2 to 4 weeks. There are several factors like size of your product, number of selling channels, complexity of your workflows that come into place. Again, we don't have any implementation cost at all. We consider it as a cost of doing business. We have a simple flat rate monthly or annual plan. You can take a look at that. Sam should be adding that for everyone to see.
Awesome. Great. Okay, last slide, we're going to talk about our next webinar. Like I mentioned, you guys do not want to miss this. These webinar series build upon each other, and we have a great lineup on the next one as well. So the next one is on basically purchasing and the three-way match, which is a critical control to make sure that you're protecting your two most important assets, which is your inventory and your cash. So we're going to talk about how to make the purchasing process effortless, how to maintain clean records, and how to have a good seamless reordering. So the next lesson on the Inventory Counting Simplified series is going to be on March 5th at 10 Pacific time, 1 Eastern time to learn about this process. And it looks like we have Tamara, I know this guy, but tell me who he is, who's on our next webinar.
Yeah, the next guy is John, and he is our reporting guru here at
Yes.
Finale Inventory. So you guys are in for a treat for sure.
You guys, this is really great. Like for reals, like mark your calendars, save the times. These are really going to be worthwhile webinars to attend. We love Finale. We love everything they have to say. And as you can say, they are givers also. Like, I don't know if you guys understand how unique this is, that they have a no cost in-house implementation. What we tell our clients all the time when we get to this point, when we're helping them try to decide this, is we're like, you have nothing to lose. Like, it's not like you invested $20,000 on the front end for an implementation. Like, by implementing the tool and going through the process, just that alone brings operational maturity to your organization, because many of the things you have to do on the front end of that help create visibility for you as a company. So we love Finale. We love everything they do. We love their support. We love their partnership. We love their tool. We love the people, quite honestly. They have now become personal friends. I consider them my conference besties. So we hope to see you guys on the next webinar. Thank you so much for joining this one, and for your engagement, and for your questions, and for your interest. And reach out to Finale if you want to know more about implementing their tool, and reach out to us if you would like to know more about getting support around your accounting for e-commerce. And with that, we will see you next time.